Hey, good morning. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments. Well, it is December 9th. It is USDA Day. I don't care if you're bullish or bearish. I don't care what your opinion is. You should probably get some risk on paper. What does that mean? Well, if lower prices would hurt you, you need to put. If higher prices would hurt you or make you angry, you need to call. And that is what a hedge is. It's not, it's admitting you don't know what's going to happen and taking some steps to try and protect yourself against that risk. That's really what it comes down to. The rest of it is just people jabber wobbling. Overnight, this kind of dead markets. March corn up 3/4 of a cent with a 4 cent trading range. Beans. It's funny. I had a bunch of people call me and tell me that we were going to be so higher last night in beans after what the president said. Some rumors about China doing this and doing that, and these guys owe me a check because beans are down a nickel. We had a typical garbage 7 cent range. March beans down 4.5 cents though, 11.01. You're got to be looking at new crop beans. 11.30 beans was the high. We're now sub 11. Remember we started this whole mess down at 10.48 back on October 1st. So we had a really good rally in spot beans, $1.57. New crop beans. You got to remember on October 1st, we were at 10.50, 10.48. When people were concerned, oh, what happens if we have sub $10 beans? Then we get to 11 and change, 11.30. Now it's like, oh, we'll never see $10. Oh, well, don't worry, we'll never see it. I'm not worried about $9 beans. It makes me kind of smile because if one thing's for sure, nobody knows where we're going. You've got to take advantage of rallies like this when we get profitable. And I'm sure there's somebody out there that's going to tell me they don't make money at $11 beans. They probably don't make money if beans went to $40. I mean, at some point you have to know where your profitability is and make sure that that does not get away, right? I don't care if it's whatever your number is, but the market does not owe you a profit. People get mad about that, but that's the truth. And the market historically has a tendency to always go to where the output cost, what you get, is less than the cost of production. We've seen it for decades. It happens once in a while. Now, once or twice a year, every year, and I do believe this, you have a chance to market your stuff profitably. Don't let that chance get away. Everybody always wants more. I get it. But if you do nothing to take advantage of rallies, I think you're just rolling the dice. Now, yeah, it's early in the year, but remember what happened last year? We had our high for the year uh, the second week of February. So don't look gift horses in the mouth. This probably is not going to be a big USDA report. Generally, it isn't. The January report is going to be. I can tell you that. That can move the needle. And I'm not saying it's all bearish, bearish, bearish. I don't play that game. I hope it's bullish. I hope that all the people that are short, the funds are short 100,000 corn, 100,000 wheat. I hope they all, have to go get home equity loans, and I hope they all lose a lot of money so the American farmer makes money. But hope is not a marketing plan, right? And what's the flip side? Well, right now their funds are long beans. Does that mean they love farmers? Does that mean they want to give farmers a Christmas present? No, it means they want to make money, and you should too. All right, that's all I have to say about that. March wheat, a nickel range overnight down 2.5 in Chicago, 6 cent range in KC down a penny and a half. If I'm storing wheat right now, I want to make sure that I don't get run over. The contract low is 509. We're trading at 530. If you don't care about the 20 cents, don't hedge. Um, if you look at March KC wheat, the contract low is basically 498. We're at 525. If you don't care about the 25 cents, don't hedge. Okay. But then you also don't get to complain a month from now if we're sharply lower. So yeah, there's not a whole lot of meat on the bone in wheat. I get it. 25 cents is 25 cents. So and the good thing is you don't have to spend a fortune to defend that revenue. We're going to see what happens today in the cattle. Cattle, very, very technical rally. We had a really nice move in fat cattle. We were not able to take out. I'm looking at fat cattle right now, 228 and change. That was the high on November 11th. Yesterday's high was 228.025. So we kind of stalled out there. Is that a double top? Are we pausing? Are we going to go get in the gap? There's a gap up there everybody's looking at, which comes in around 232. So are we going to get that next 5 cents? I don't know. I am thankful, however, that we're not back down at 205. So is that $25 worth something to you? Again, if it's not, then don't hedge. I don't care. March feeders finished down $3 yesterday, 287. Same idea. People were concerned: are we going to get in the gap or not? The gap above is at 331, and then it goes all the way up to 345. So are we going to get in that gap? I hope so. But as of yesterday, we weren't able to take out Friday's high. So we'll have to wait and see what happens there. Again, do you care about the fact that we went from 293 to 330? If you don't, then don't hedge. It's just simple as that. And in the lean hogs, April lean hogs, same thing. We had about a 38% retracement. We had a good bounce off the lows. Lows, just 2 weeks ago, we were down at 81 cents. Here we're trading at 87. Is there more to go? I sure hope there is. I'd love to see April lean hogs get back up to 90 cents. There's a pretty good congestion pattern up there at 90. But again, what I don't want to do is ride April cattle down to 76 cents when we're here at 87. So defend that. Um, get your risk on paper. And I would also say this: today is Tuesday. We might not shake out prices till Friday. We may have some garbage trade today, tomorrow, Thursday. Where we settle on Friday is more important than anything else. So if you're setting hedges, I would at least get a hedge until Friday. You get weekly options. I had some guys, you can get 4 days, 11 days, or you can go get a January option, which gives you about 18 days. So gone are the days where you had to go buy 300 days worth of protection. That's why options are so expensive. Everybody hated them, blah, blah, blah. Now with these short dated options, you can do some relatively inexpensive um, protection. And again, I don't care what your opinion is. If you want to be George Soros and day trade and if you want to be a Rich Dennis and turn $300 into $300 million, God bless you. Go for it. But for the rest of us who don't have psychic abilities, we hedge. Okay, this is Chris Robinson, 312-638-8868. Give me a call. Have a good day. We will be checking in with you later on at the close. If you're not getting my letter, go ahead and sign up for it. It goes out every morning. Key levels. I do the homework so you don't have to do it. I spent 30 years doing this stuff. I share my knowledge with you. I am not perfect. I am not psychic. I am not all knowing, but I do the homework for you. Take care.